from the station that's on your side. This is Channel 7 News. Good Morning Arkansas.
Also, Patrick Dennis with Bank of Little Rock Mortgages here today, sharing 5 things to consider for first-time home buyers, and we are approaching the home buying season. Season of spring is a time where you see a lot more on the market. So if you're one of those that's looking to be a first-time home buyer, some really important information to share with you coming up. Hey, still to come on today's show, we've got Patrick Dennis with Bank of Little Rock Mortgage here sharing the 5 things to consider for first-time home buyers. Did you and Sarah buy your first home yet?
No.
Okay, well, good news for you.
I know
Patrick's
step
here.
1, it's get pre-approved.
That's
He'll
right.
tell us the other steps coming up here shortly.
Coming up next after the break, sharing 5 things to consider for first-time home buyers, which James will be one of them soon. So stick around. We'll be right back. Hey, 9:35 is the time. Welcome back to Good Morning Arkansas. If you're thinking about buying your first home, now may be the best time to invest in your dream home, as mortgage rates are at historic lows, and understanding all of your options is crucial for acting fast during this time. Between understanding the market, industry jargon, a lot of local options, buying your first home doesn't need to be a daunting task, though. So to go over the top 5 things to consider when purchasing your first home, Patrick Dennis, a loan officer from Bank of Little Rock Mortgage, is back in studio today, breaking it all down. And Patrick, this is uncertain times. Of course, we've talked about uncertainty with the coronavirus, and that has really caused a lot of fluctuation in the markets. And we saw the Dow yesterday just absolutely tank. What would you tell people coming to your office right now saying, hey, we've been planning on buying, because planning we know takes time.
Right.
What do you recommend right now? What do you tell people coming in saying, what should we do?
Don't try to guess.
Okay.
Take what you get right now because rates are phenomenal. I mean, we're still in the 3% ranges as far as conventional loans go. FHA is low. We have been at historic lows for years, to be honest with you.
That's true, yes.
And we really can't predict what a market is going to do. Mm-hmm. So now is the time. It's a great time to buy.
Let's start with the first of the 5
Sure.
things you want to talk about today. What's number 1?
Yeah, so your most crucial thing that you want to work on is your credit. Okay, just make sure that's in check, making sure we don't have any glitches on your credit report, any mistakes. I found 2 this week on people's credit reports.
Really?
Yeah. And the other thing is don't just go in blindly. Pay down your credit cards, but anything other than that, make sure you come to us, get a pre-qualification, and we'll help you with boosting the rest of your credit.
And finding out someone's credit score, I know there's a lot of different ways to do that today. What do you guys recommend? The free services that are available? Equifax, what do you think?
Those aren't bad to monitor your credit.
Yeah.
Absolutely. Those are good checkpoints. But if you're really serious about buying a home, you want to get a pre-qualification. We pull your credit report.
Okay.
We'll review it with you, tell you what your score is, and we'll also help you if it's needed to raise that score for you to get the best possible interest rate.
Put together a game plan to go
Absolutely.
forward. All right, what's number 2?
Okay, so if we're looking at loan to value on a loan, you want to get your down payment in line so you know what kind of equity you have in a house.
Okay.
If you get a $100,000 loan or a $100,000 purchase, you have an $80,000 loan. There's no mortgage insurance on that because you're at 80% or below.
Yeah, which is key.
It really is huge. Yeah, it's a big factor.
So make sure you know that going in and figure out what works for you based on those numbers, right?
Yes.
And I know you guys will work with them on that and say, hey, here's what you're looking at with your kind of down payment. Right,
no question
to
about
avoid
it.
that PMI, because the PMI is something that it could be it's doable, but it is something that is can be pretty expensive over time built up, right? Because it does. How long does PMI stay in?
So generally, it's going to last on your loan until you get to 80% of loan to value.
Okay.
When we categorize it first, it's 120 payments. It's 10 years on a conventional loan.
Okay.
On FHA, it's for the life of the loan.
Wow. Okay.
So those are things to think about. And once we do a pre-qualification, we've got a better idea of what you qualify for and what the best fit for you is.
All right, that was number 3. What's number 4 on the list today?
So number 4.
Yeah, we'll go ahead and put those numbers up, or put that information up, so we can go through them today, because it is something that whenever you're going through this process, interest rates are always going to be, like you said, something to monitor. And right now, you said they went up slightly.
So
just slightly.
It's been
still under 4, but. What's it been like?
Strange and volatile market this week, so we've just been following it and, working long hours trying to figure it out and get people taken care of with refinances, with purchases. Big drop on Monday, went back up on Tuesday. Wednesday is kind of a blur, but you don't want to try to catch a falling knife rate-wise and interest-wise, or interest rate-wise. Go with what you got right now. So interest rates in the mid-3s right now.
which is great.
And here's a
by the
big
way.
thing about interest rate. It is determined by the program you're on.
Okay.
FHA rates or FHA mortgages are going to have different rates. VA is going to have different rates. Conventional loans are going to have different rates. And your credit score is going to determine a lot of what that rate is.
Okay.
So
and,
huge things.
We'll put up our fifth
Yeah.
note this morning. If you're looking to be a first-time home buyer and you want to head out there and talk to Bank of Little Rock Mortgage, closing costs are going to be part of the conversation. It is every
Yeah.
time. What do those entail?
So closing costs are not always something that somebody factors into a loan. You have several different third parties that are involved, such as title companies. You have an appraisal fee, insurance. We collect a year of insurance.
A lot of players
front.
in this game, right? Yeah.
Absolutely. 3 to 4% of your purchase price is normally that rate of what closing costs are going to be.
Okay.
And if you're buying, you want an experienced realtor to help you negotiate that, as well as possibly have the seller pay some of those closing costs for you.
That's negotiable.
So you don't want to come out of pocket.
Yes,
You don't have
that
to
is
come out.
negotiable. Talk
Absolutely.
with your realtor about that
Sure.
and make sure that you can at least have the conversation, because that can be, depending on the home and depending on the process, they can be up there, right?
It can make or break a deal.
Yes,
So,
absolutely.
And we're willing to, there's possibilities that the lender can also provide some of those closing costs based on premium rate pricing. So
Okay.
there's options.
Remind everybody about where you guys are located.
Okay, so we're Bank of Little Rock Mortgage at blrmortgage.com. We're on Twitter. We're on Facebook. Our phone number is 219-9100. Holler at us. We're here for you.
Call, set up an appointment, go in, talk. Hey, it's an easy conversation to have whenever you got great people to talk to, and they're going to break it all down in layman's terms. Because if you're a first-time home buyer, you might not be familiar with a lot of the jargon and a lot of the different things that go through in this process. So call Bank of Little Rock Mortgage today, and they'll take good care of you. All right, we'll see you next time.
Cool.
Thanks, Mike.
Thank you.